Tuesday, March 17th, 12:38 a.m. or p.m., excuse me. So what up, everybody? Back on the trading log. We are back at American Eagle. As you can see, we've entered 100 shares short. So enough time has passed where, unfortunately, again, we missed about $2 a share from the 1950. I think we got really $20 to about currently. It's about $2.50 a share. Left about 1,000 on from our original position. But the price action has been weak enough where it seems to be kind of, again, we can see these open up with the spread kind of wide, and we have a very brief, I don't even want to call it appreciation, but just like the spread tightening right around this 18 level. And so the thing on our, again, we have the dividend payment, the ex-dividend date of April 10th, but again, small enough position where the overall price action is more consequential than the dividend. We don't want to pay the dividend, but this price action is weak enough where we're again trying to catch kind of this as more of just this mundane. We've got away from this appreciation. But for our levels now, since again you can see our price average is a lot lower since we just entered. But pretty much, again, the same levels, 18 to 20 is its kind of little thing, which, again, we have 100 shares short here. Last time we were up to 360. So same type of position sizing. Wanted to have some exposure. I could definitely see it dumping from here after these extremely weak days. And, again, there's no stimulus we're just going into summer, right? So the seasonality for a company that I see as cyclical and pretty well established into its maturity, it's not going to come out and innovate. I see this as kind of just drifting down, not a volatile stock, in my opinion, from this level, and for the next 6 months. And so, just kind of, it's not going to be a lot of updates over here because it just, we're either going to catch this down drift or again we'll float around the same price or appreciate a little bit or a lot of it. Again, those are always our options. But it was enough time from, again, this probably would have been. Frankly, there was no bounce whatsoever, and no even just like 2 or 3 days of consolidation and reappreciation or anything. And so it was just a more severe depreciation than I expected, which again we were literally shorting the stock. And so that's what we're doing over here in American Eagle. Again, I consider this a small position, 100 shares, $1,700 exposed. But it just no other conviction, and I want to trade. So that is definitely a consideration. We still have SanDisk. We're going to hold it said. This is the one that I do have some conviction on, but the price per share and the volatility is substantial. We have Micron reporting after the bell on March 18th. That is tomorrow, Wednesday. And so with this price action up here again, up to 850 to 1,000 would surprise me zero. I will short another share after the earnings, whether it appreciates substantially or if it doesn't appreciate. Will give us a good indication for the next 2 to 3 months for this kind of memory trade thing. So we're watching Micron on the earnings tomorrow after the bell. And so, again, those are our things there. We got stopped out of Joby. Again, we just keep fluttering around this $10 level. Nothing really exciting going on here. Gemmy, again, seems to have been a decent sell. Again, just super small positions, just trying to just participate, make content, and commentate on the markets. But that is really where we're at. The S&P, again, I said 663 was the top way back in like September, October. Doesn't matter at all, but just again, if you just buy the S&P again, which is, we talked about portfolio construction, and I'm not going to, without actively doing it right now, I'm not going to try to. But again, owning these major indices, I do think they capture the momentum of the appreciating stocks pretty well. And so, again, but to add to this like an index fund like the S&P 500, the SPY specifically, you can't actually trade the SPX. But it would just have to be to add a big position. It would have to be one of those big retracement days in a financial situation where like I'm trying to be an investor, I'm trying to expose capital to take on, to hopefully make good money, but with the ability, with the psychology or acceptance that I could lose money. And we are not in that position right now because, again, do we have constitutional rights? No. So for our talking points today, again, I just sat on here and watched this big orange buffoon get up there and talk about Hey man, it's just the dude is running the country like a celebrity TV show. It's like, oh, we bombed Iran. We have the best bombs in the whole world. I don't give a single fuck about the Constitution. I don't care about my own citizens sitting on here every single day talking about the violation of my rights, the destruction of my property, grave bodily harm. Who gives a fuck? And so it's an embarrassment. Again, as a grown man, as somebody with actual values, with actual morals, who just simply has no politics besides I want to have a career and a family, and like let's just do shit that makes sense and be productive. And I just don't see that maturity or that behavior from absolutely literally anybody. So again, as always, Donald Trump is a fucking embarrassment. Michael DeWine is an embarrassment. J.D. Vance is an embarrassment. Jim Jordan is an embarrassment. Andrew Ginther is an embarrassment. They're not men. They're just little boys and girls who play politics and get where they want to go in life and then fuck the next guy because who cares? But that's what's going on in our country. I mean, you just turn on the TV every day and see literally a big guy drenched in makeup, drenched in spray tan, golfing when citizens are getting killed in an illegitimate war. Talking about it, it's like, again, he sees the military as like he's playing a game of Risk where, if a couple citizens die, he's literally said, who cares? Hey, Donald, where was that commentary about, what was his name, John McCain? Isn't like only like the bad war people get injured? I mean, come on. Why don't you go tell the soldier, the airman right here in Columbus, Ohio that? Go talk to his family. Seriously, like why don't our politicians have to like sit down? Our commander-in-chief, who again is golfing while other people are getting blown up, again casually refueling planes. I mean, it's just like comically stupid. And then they shroud them in the American flag and have an honorable discharge. Do you know what would be honorable, Donald? To respect the Constitution and not get them killed in the first place. All of the little theatrics and let's have a parade and all stand there like this. It's a fucking joke when the Constitution is not respected. And it's not, clearly. I mean, I'm sitting here deprived of rights. And again, not even me. It affects everybody. But no one cares. And so that was our big talking point, is our buffoon of a president acting like he has any morals or respect for the Constitution. Again, I'm not coming from some political aspect. I'm not coming from some religious aspect. I'm like, hey guys, this is the law shit that you guys talk about every single day on TV. Is that real? Obviously not. So that was the big one. Again, the Ireland president specifically, again, they're just talking about the different Iranian conflict stuff. Trump bragging about how he took them all out. He hit the Kharkiv Island. I'm sure you never even heard of that before. His generals, and it's hilarious seeing again, your E-11s, your mastery gunnery sergeants up there, and they're all like fat, out of shape, and they look exactly like the North Korean generals with a bunch of medals. And it's like, dude, you probably like check your Fitbit for how many steps you walked today. And so we have an absolute abomination of leadership. And again, this kind of criticism is true for absolutely anybody, any jurisdiction that I have lived in during this since 2017. 100% faces the same level of criminality. So Donald Trump's up there talking about how again everyone's criminals, and it's just projection at face value from literally every single person I have met. Because no one actually cares about anything. It's just about your career and your job, and then no one really gives a fuck. This world is such an embarrassment. But regardless, that was our big talking point, is Trump being an idiot. We had some follow-up on the private credit conversation. Because I said, again, that terminology is like, credit is like you're giving somebody a loan. Private credit, I guess you're just getting a loan from not the Federal Reserve or not a federal institution of some effect. But Mike Santoli said that a lot of people are looking for redemptions. So to me, this just means... again, from what I can gather, there seemed to be some attempt to describe the actual situation, but you just have people that pool money, or they have a fund, and then they give out money privately, I guess just to companies that are not traded publicly. To me, that's what I'm gathering. And they just want out of their funds. So it's like, hey man, I give you $100,000 to invest. It's a lockup period of 18 months, 24 months, 36, whatever. I just want to come out sooner. So that's me. Again, we referenced this private credit crisis, and I'm like, I don't even know what we're talking about. But it just seems that's what's going on. And then Josh Brown was just on here, which is kind of my sentiment. Where do you see that in this data flow, in this, hey, I'm going to go trade something? In the long term or even medium term, again, private companies, I guess, would to me just mean, again, not public. Not anyone can go on here and become an owner. Again, I think the dynamic that pops up is just, in the public markets, you have a lot more potential for appreciation, right? If the general sentiment likes your company, as opposed if you go raise another round. So to me, this is more just like a valuation thing. But the private credit crisis, I guess, is just people trying to pull their money out of funds that are investing in companies that are not traded on the public exchanges. And so then I have that kind of leads me into, what's the difference between private credit, and then sometimes you'll hear private equity, and then venture capital, and then angel investor. And so it's just like we have all of these differentiations of like when you give money or whatever, because even it's like credit versus equity. Okay, if I'm giving you a loan where you have to pay me back, I own no part of your company, or if I give you money for an equity stake, to me it's still just generalized under I have financial interest in this legal entity. And so just the private credit terminology is so profoundly general. I'm not even wasn't really sure what we're talking about. We got some clarity there from Santoli's. And then, again, private equity. What's the difference between private equity and venture capital? The size of the fund, the round. It's just again, we're back in Wharton and Babson and Harvard, and we're all just jerking off over the different Series A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. It's okay. Is somebody giving money to some extent? Even, again, the dynamics is different for equity versus debt, but it's still again, somebody's giving you money for financial interest to make money off of your business development. And so that was our talking points for today. Nothing, again, pretty dull everywhere else. I've still been watching, just nothing really popping up. And again, when I'm not actively managing a trade, it's just I don't look at this stuff at all because there's no point. But then I don't have constitutional rights. So popping again, American Eagle, small position, SanDisk, small position, higher conviction on SanDisk. American Eagle is just, again, it just feels absolutely dead over here. And so 100 shares short, again, this could pop back up and it would not surprise me. Again, it's just then this is another one of those things, because I said, I'm so in tune. And again, anyone who watches the market and trades, you don't even have to be good, but you will react to the tension points when it's the pivot points. Again, your resistance and support changing, becoming, what was resistance becomes support. But then you'll intuitively line up to when these things move. And then if you're just in the wrong direction, it just feels like you're the worst trader ever, because then it just rockets the other way. And so this objectively, again, for the position size, I'm 100% planning and positioning for, $20 to $22, I just want some exposure. Again, if we go down here, I see it more likely that we go down than we go up. That's why I initiated the position. Same prospectus as before. It's just a lot weaker conviction with these levels. And so, but again, we still have, again, even to 14 would be, again, another $300 if just with this position size. But in terms of price action, 14 to me is the next. 16 really, but then 14 in terms of, okay, here is the stimulation of Sydney Sweeney's three boobs popping up. And so it's we're still unwinding all of that appreciation. And so to me, there's still room to go down, not nearly as high of a conviction as when we were managing the trade up into the mid-20s. Yeah, I had a good profit on that, left some on the table, but the overall management of the trade was fine. And then I literally just want to trade, and it's what else am I going to go look at? And so I'm thinking over here, everyone, the news cycle today is at any point in time is basically what's going on. Well, now it's what's going on with Iran, but something with Trump, and then it's every 4 segments is an NVIDIA headline of something. And so it's just you could not look at the market for the next 14 years and come back and it's just going to be somebody talking about NVIDIA. And so it's not much has been going on. But the Micron reporting after hours tomorrow will give us some indication, or certainly cause a volatility in these price actions that are 1,400% appreciated, but we're coiling up to the top. Again, I see this absolutely as blowing out into those earnings. We will add a share or two here, right around those, again, 850 to 1,000. Those are kind of our levels for, again, each share. 1 share around 850, 1 share around 1,000. And then 5 shares is truly our our max thing over here. Just because of the nature of the trade. Again, could this thing go to 100,000 a share? Because I guess you do get a good, when you kind of sit here and say, okay, what is absolute categorically crazy town, blows out of the water to the moon? You kind of do, again, you get, if we just look at GameStop, again, stocks that are appreciation for no other reason besides fun time. People just getting all excited. And so we have GameStop over here. Again, I did it reverse split or something. It was like, the price per share was like the $400 to $500. And so you kind of still get like a gauge of like, if things are just going absolutely categorically, this makes no sense, but it's just going up, right? You're still looking at around, things going from, $1 to 120. And so if we go from 20 to like 2,000, I'm thinking like 2,000 would be the absolute carnival land crazy town for the memory trade, but there's no real gauge on it. But it's still kind of calibrated by sentiment. It's like, can this thing go up, from $100 a share to 200? Sure. 200 to 400? Sure, but less likely. 400 to 800? Okay, now we're getting there. 800 to 1,600. And so it's just like, even once you get out of any sort of like fundamental, this is business, this is, again, this is just, extreme momentum, blowout momentum, you still kind of have a calibration because other people look at other things that have had that same level of intensity where it's just, bananas, bonkers, everything's just going straight up to immediately to the moon. And so just kind of a passing thought. So pretty dull, not too many talking points. Again, I do not have constitutional rights. My life quality remains at 0. That is what I have for you today on trading. Thank you for watching. See you on the next one. Tuesday, March 17th, 4:17 p.m. What's up, trading log? So we are back. The market is closed. Let's make sure this is off. So just a couple thoughts. We did not have much action. I almost immediately put a hard stop on American Eagle, right at 17.55 or above the volume weighted average price. Just a position, again, that intuitively felt like it was going to dump more, but again, like I said, not a high conviction. One to trade. It just a tight stop loss because I do not want to get, again, stuck for like another couple weeks, 2 weeks, 3 weeks, a month. Again, I don't even have that much high of a conviction of down from here. And so there was a tight stop loss. We got stopped out at $19. Again, do I consider this over trading? Because to me, just over trading is just trying to force something. This didn't seem forced, but this definitely was not high conviction. And so again, this is just, within my risk tolerance. Okay, I make $1,400. I don't take any out of my account, and I'm just like, kind of want to trade. And so I wouldn't say this is over trading, but this is not something I'm super excited about because that's a book or that's a lunch or that's a something. But it's just, you're in a trade for like 20 minutes. It's just like the natural fluctuations. We kind of hit most of the real move. It could go farther south or depreciate farther from here. But just the risk reward wasn't there. So tight stop loss and we got kicked out or stopped out. Not a very exciting position, obviously. And so this is what I'm saying is before is like, if I just have a bunch of clips like this, I don't really make any videos when I'm talking over the economic points that are present on CNBC or whatever's going on in the current events. That's a lot more interesting to me. But even just we finished 1929, it's like, again, without cash flow, without constitutional rights, again, I want to be out there actually doing real business. Doesn't even exist. And so I just, there's just like, why trade or why do whatever. But regardless, I do like doing the trading log, and it gives you good talking points for the current events as well, from an economics perspective as well. So I like to keep doing it, but stopped out of American Eagle, might try to trade it, but again, it's just if I do entries without any real thesis, might update, might not, but we are out for now. But SanDisk, again, Micron earnings, tomorrow after the bell, finished up strong here. Like I said, 850 to 1,000 seems pretty inevitable. Well, I would say 850 seems inevitable. But just trying to get, again, a gauge on tracking the momentum when this, again, the price action to the sentiment changing is really what we're trying to follow here in this little trading log at this point. And so, or at least for right now, again, something might come up, but I just don't see myself, again, taking any meaningful trade. So just kind of, again, talking along with current events and kind of following the memory chip. Because again, as we were saying earlier, every fourth headline is something about NVIDIA. That's clearly, again, the momentum of, the tech pairing of innovation to like computer chips, but just to the overall technology development. That's really, again, the FANG existing is like that's the momentum trade of like the last 20 years. And so that's always, again, in the news. this, again, I was just looking at like market capitalizations. Again, just trying to get like always planning for cataclysm. Like what's the worst that can happen? So the market cap is actually not that high again in comparison to Nvidia, but it's just like how do you, right? This is at what 106,000 million, 1,000 millions, a billion, so 106 billion, and then Nvidia is like 4 trillion, and so it's like, again, that's why I get no leeway or no indication of like price action from price to earnings, from market capitalization. Yeah, 4.4 million, so that's $4 trillion. And so, meaning, again, why couldn't SanDisk grow into the kind of market capitalization of NVIDIA? Maybe it could. But again, just trying to get an upper bound of, what that looks like in terms of share price. But regardless, again, our full share size will be a whopping up to about 5 shares. Again, still not trying to lose any money, but it's just one of these. I think we have an upper bound on extreme momentum from other things going for extreme momentum, where this has real infrastructure, real business behind it, as opposed to, again, GameStop. Again, that's the one we talked about earlier. It still has real business behind it. But to me, the price action of GameStop from 2021 is purely like the pinnacle of what momentum, excitement, social sentiment, meme stocking can be. Could be wrong. Could definitely be wrong. But meaning is, I think a company like SanDisk has less of less chance of appreciating like GameStop did, where it was just basically a carnival. In this one, it's still a huge appreciation, but there's genuine consolidation. There's genuine trading. I mean, for the past month, whatever. Let's move my cute face. And so, yeah, well over a month above this, 540 really, but even upward just into the 600, 700 range. So I don't need to put my cute face that high up. But regardless, again, managing the trade, I'm always thinking, what's the absolute worst thing that can happen with an open short position? You kind of don't really know. But again, the position is so small. I do think there's like an intuitive upper limit just because of other extreme appreciations. Hopefully we don't get into a situation like that. But again, the overall market cap, as we just pointed out, $100 billion to $4 trillion. Again, to me, there's no validity or not validity, convincing us like why something should be trading at a given price to earnings multiple. Then you have, again, some sort of sector analysis where this one's in this sector and this one's in the same sector at a lower price to earnings, so it should catch up. You do hear that conversation. I don't think it's presented in any sort of like sophisticated way or attempting to be. To me, it's just one of those things where it's like I have no indication one way or the other what something should be trading at, if something is in the same sector or same type of company, why one company would be trading at a substantially bigger multiple. But you kind of see that stuff all over the place. And so, long story short, or short story long, or I don't know. And so, hopefully we don't go super cataclysm. But $1,000 to $2,000 a share, I mean, it wouldn't even be like outside of its normal trading action. And so, we're just kind of following along this. Again, as long as there's no dividend, again, we don't want to see a minus 1,000 or 2,000 in the account, obviously. But the share size is rather short, or it's extremely small. But if it were to get in, again, we could put a hedge on where you just buy call options, where if you have some sort of extreme appreciation, you can, that's what I'm saying, is you can hedge that, because you would get the, just options in general with the, like if you're playing out of the money stuff, even if you're playing in the money stuff, it can go out of the money pretty quick. But the blow off tops as a hedge, where it's like, do I see this really trading up to like $2,000 a share? Frankly, $2,000 is not that out of the question, or out of the question at all, in my opinion. But like, could it trade up to like $20,000? Right? Berkshire Hathaway, their shares at like $300,000. Great, I don't think you can. Okay, it's like so it's like there's really no upper limit, but Berkshire Hathaway's market capitalization is not right. It's appropriate. The price per share is appropriate to its market cap, where it's not. Berkshire Hathaway isn't more valuable than Nvidia. But regardless, it's just like, again, if we were to need to hedge this at all, we can put a call option on, again, out of the money, dirt cheap, at something ridiculous. And then if you get an extreme appreciation, that call option is going to be worth a substantial amount of money. And so the situation in which I think it's easiest to hedge with options is the extreme blow off tops. Because if it does, for whatever carnival reason, were to go to something again, $10,000 a share, just again, I think something that would be extremely out of the question, $10,000 to $20,000 a share, right? Where you're talking, everybody on the news is talking about it. You have halts and stops and, people suing it. It's like, how did I lose this? What's going on? That type of thing you can hedge again with the call options to the extreme upside. Whereas if you try to do something that's like an option strategies, I just haven't executed that many to say like a strategy that I like or don't like. But options legs makes sense where you have, again, an overall strategy. But if you just have like one leg or one side, and then even if you're in the money, again, you have the deterioration up into the expiration day. And so you have that depreciation always. And then so you can still, again, if you have a short-term fluctuation that your option expires worthless, and then you still lose out again on the share appreciation or depreciation, only fluctuates real quickly to make your option valueless, worthless, and then it also continues to make you lose more money. It's like that's just like, adding insult to injury and losing more money. And so that's why I would, again, if you're doing options, pure options trading has never been, that has just never been something that makes sense to me. I want to own something every single time or sell something. Again, shorting doesn't really make sense there, and to say own something, well, it doesn't make sense at all. But the dealing with the actual securities as opposed to the derivatives to me is always more, I just like it better. Conversely, you get the higher appreciations potential, but to me there's enough. Again, if you buy SanDisk last year and you make 1,400% as opposed to 20,000,000% on the options, it's like you're at a return rate that you're going to be pretty happy with. And so regardless, this is probably the only trade I'm focusing on now. Certainly the only thing I have any conviction on. Started the American Eagle immediately. I did close it. Well, it popped above 1750, which was kind of, again, the psychological place I was playing for the day. So if it would have closed down, I probably would have held it, but just did not like the entry. Just wanted to trade something. And so just had a hard stop and we reversed. And so I was out of that pretty quick. But again, we have the history, the backing. We'll be following this. For our talking points, we have the Fed rate decision tomorrow, which again, as you've noticed, this thing happens every 3 months. And so it's like, do I even see the overall Fed rate decision? Again, I flinch every single time about the relation to the stock market, saying, oh, it's going to appreciate. Again, what part of the stock market? Which stocks? For how long? When? It's just like, it's such a generic, meaningless conversation to me. As we've said every single time we've come across interest rates and stock market relationship. But the Fed decision in general, again, it seems with the Iran war, less likely to have a cut. Seems like people are expecting one cut later in the year. Again, just straight to the moon. We want a war shark close. I guess he's not even confirmed yet. So Jay Powell, just we want 50%. No, we want 5 million% interest rates. If you don't have assets, too bad. Again, I don't have assets I don't have the assurance of constitutional rights of social structure. Me getting a letter from the IRS is one accounting line away from I have another huge fucking headache for infinite many hours because, again, I'm the victim of crime. But I'm just at a level where I can't fucking care. I can't have constitutional rights. I can't have a family. I say it in every video. It's ruining all of my educational content. But it is the most relevant thing to my life. People just don't get how categorically devastating it is to not have access to social structure. I want to make money proportional to the value of my property, pay the taxes, and live my life. That is what I want to do. I am fraudulently restricted from my property by the government with thousands and thousands of people demonstrably aware. No one gives a shit because there's no morals and no values. And so, again, I can't. I literally can't. But that's not going to stop me from getting a letter, and then I have nothing I can do because there was no court, there was no lawyers, there was no nothing. There are a bunch of privileged people that played sports all day, and I'm over here trying to have a career and a family, and it's fucking impossible. So, got to get that into every video because it's true. And so, again, I'm sitting over here, my only income is holding treasury bonds. So, like I said, I am supporting the United States government in the public market, and I very literally own all of education. That is a fact. But we will never respect the Constitution, so I do nothing. So the Fed rate to me, again, the consensus is the consensus. I'm expecting that's kind of what's going to happen. But in general, I just don't see these decisions as, if you're an active trader, an active money manager to any level at all, meaning like you kind of look at your stock portfolio at least like once a year. This relationship between, again, okay, what is the Fed decision? Then what do I go reallocate in my portfolio? To me, there's just, it's not even close enough to a strong correlation to cause any sort of change. And so, I immediately take that back. But that's, again, if you're not satisfied with your fixed income total dollar figure coming in, that would make you change away from bonds. But to me, it's not saying there's a given rate that's going to make a stock, a given security or a given indice or a given ETF appreciate a given amount. To me, it's just such a stupid relationship. And it's never like explained with any sort of meaning of like whatever. We've talked about that so many times. But again, it's just like free speech. Every single time it makes me want to say more. And I've said all I could. But that is tomorrow. And again, we'll probably won't see much of anything. You might get less on your fixed income like me because, well, who knows. Other 2 points. Do I see, Melissa Lee says, do we need a blow-off top or capitulation? Because I'm over here again, I kind of expect it, and I think she made the further comment of like, we're used to a time where there's always been blow-off tops, or always been capitulation, or these correction moments. And to me, the immediate intuition I have is like, are there always kids that have to grow up? And I don't even mean that like, yeah, fuck all of you, fuck everybody, obviously, but maturing is just an individual process. And because you're in a highly speculative place where you can make real wealth truly like in one day, in like 1 hour. And so the opportunity is always there on an individual level. The overall money management maturity is so low. So low. How many people haven't even looked at tickers of what their portfolio is constructed? That's a lot of in boomer land. But the process of growing up in general, that's biologically certain. If you don't die, you mature. But then maturing in terms of money management, it's such a so low bar, and then there's only so much you can learn that I always see these corrections happening because they reflect human behavior. And right, no matter how mature any one individual is, they reproduce. That organism, that individual is gonna have to grow up and learn the world just like there's only so much you can teach other people, and it's very, very little to begin with. And so, I do think, again, blow off top, capitulation, correction, a steep depreciation in asset prices for a short period of time as a reaction. I don't see that going away because, again, the process of maturity. And so we don't need one, but I do think they will continue to happen because of growing up. And in this case, meaning literally just managing money. Because, again, once that panic sets in, a bunch of people start selling. It's just like, what do you do? Even if it's not like, again, a correction or a depression or, some sort of extreme event, it's the same sentiment. And so I do think you certainly don't need one, but I still think it will be a function of maturity that we will see in the financial markets. The other kind of thing is is there going to be a war-ending announcement pop, right? At some point, right? Again, it seems to be every day. Donald Trump, again, is a total carnival joke. But oil prices are up. We've been talking about this war again. That's what I'm saying is it's like everyone's like, we have all this negative news. It didn't really go down. What's happening? It's just like you have this overall moral sentiment of like, what the fuck? Why do we have another war? Which, again, most people don't engage in politics is kind of their reaction. And then you just have a couple people that have access to, again, militaries. And it's just like the dumbest shit in the world. But again, it's just like the market, again, not really reacting is the reaction. It's just like you just immediately normalize the sentiment like, well, what is any one person going to do? Well, you could be Donald Trump and stop being a fucking idiot, but you've already been an idiot. So now what do you do? Oh, yeah. And it's just, that dude is such a freaking joke, man. Start a war and then go golfing. And then go on Jake Paul's podcast. I watched a little more of that, and it's like, it's honestly like dumbfounding to see just the absence of maturity, of integrity, of being a fucking man, of being an adult. And it's just like, oh yeah, dude, I was thinking, it was now or never to run for a second term, as if being the head of a state is a fucking game. as it's like a career achievement. And again, the baby boomer generation is such a disgrace. Every single one. Again, I challenge any baby boomer out there, respect the law. Again, all of my research is public. You can look at it. Show me where your work is. I want to see it. I'll review all of it. You can't even keep up with mine. But, we're going to, again, listening to a talk like the presidency is like a fucking, again, it's like being the president of your student council in high school. But there are real consequences with the head of a massive country with a massive GDP. I mean, and then he's going on Jake Paul's podcast talking it like it's a career achievement just for me, Donald. And then he goes in again, sitting there with that Ireland president talking about like every bit of appeal is like some locker room talk you would expect from like somebody, winning a high school state championship football game. Oh yeah, we owned them, dude. We just destroyed the opponents, dude. It's a fucking disgrace. But regardless, for the war-ending announcement, he's like today he was talking about the war was over pretty quickly. It's like it's not. Oh, like what are you talking about? The dude is just all over the place. Point being is, do I think there's going to be a moment where it's like, hey, this war is over, and then it's like, oh, it's very clear the Strait of Hormuz is open up again, and now all of the stocks are going to rally? No. I just see, again, the overall sentiment reaction to the war in general as very choppy. That was the exact reason I shorted that CF the other day just very quickly. That was a good trade for the $6 a share with basically no conviction, but just a clear sentiment appreciation real quick. And so with that sort of choppiness where we look at these different oil things, which I barely follow, but in this BATL one, and so this one went down substantially. But it's just been so choppy the entire time to make a trade on it. I just see it as short-lived. And then conversely, whenever there's quote-unquote an end, which there's no clear start most of the time there's not a clear start. There's certainly not a clear end to wars. Donald Trump's thinking it's like hey, we're just going to go bomb somebody and then we're just going to be, live out my presidency and there's no more consequences. It's just like beyond, again, not a commander-in-chief in any meaningful sense. But I don't think there's going to be a definitive, hey, we're done with the war, and then that actually means something, and then like stocks rally or appreciate from it. I see pretty much, again, it's just this malaise kind of acceptance of the war, and then just right back to, again, the standard news cycle, the standard things. Hey, we're at 3.5 years of appreciation. Do we have a correction? Do we need one? We just said not really. Will there be one? I tend to think so, again, because of this maturity, development, and get in an environment where everything is already extremely appreciative. You have every analyst from Harvard and Wharton, and I don't even know if they come from MIT, but they probably should because that's a smart school and stuff, and math, yeah. All of math is sitting on the internet. And again, proof, as you can now see, extends well past what you guys call mathematics. But, and so point being is it's just like one more analyst raising a price target on a tech stock to get like 10 more percent, as opposed to like taking, again, some sort of futures contract against supply chain of Brazil versus Ecuador, or Ecuador versus Iran, or, whatever geopolitic trade you can cook up. And so I do not think there'll be a war ending announcement pop thing. I just think we'll just kind of get hooting and hollering from the presidency, and then just blah from the world politics, and it's just like, what the fuck, and then it'll kind of just like slowly fade. But that is what I have for you today. Again, no more real moves. Again, I can't participate in the world because I do not have constitutional rights. And if I wanted to trade where, again, I'm taking trades like this American Eagle, where you just enter something and you have a hard stop, it requires risk tolerance, which I do have a small amount, but it's just like, again, just to trade. I mean, it's just not something that's interesting to me. So again, this is the trading log. I would be doing this all of the time if I was actively trading. Not actively trading very much. My terminal is open, so I'll pop on if I have anything else to say. But that is what I have for you today, Tuesday, March 17th, 4:41 p.m. See you next time.